Welcome to the Defense and Aerospace Report podcast. I'm your host, Vago Muradian. Our podcast is brought to you by Bell. Since 1935, Bell has been redefining flight. Learn more about its pioneering spirit at bellflight.com. Joining us now to discuss what has been another busy week on world markets are Dr. Rocket Ron Epstein of Bank of America Merrill Lynch, Sash Tusa of the independent equity research firm Agency Partners in London, and Richard Abalafia of the Teal Group Consultancy here in Washington, D.C. Everybody, welcome back to the program and happy Mother's Day to all the mothers in your lives.
Great to be here, Vago. Thanks.
Thank you, Vago.
Great to be here, Vago, as always.
Before we get started, our global coverage is sponsored by Leonardo DRS. Northrop Grumman sponsors our weekly cyber report and our cyber coverage overall. Fincantieri Marin and Marine sponsors our naval coverage, and Elbit Systems of America is sponsoring our virtual coverage of Quad A and SOFIC, along with Bell and Leonardo DRS. And of course, Bell sponsors this podcast. Sash, let's start with you. Folks have been talking about what the future of travel looks like. McKay Coppins wrote a great article in The Atlantic about his nightmare of a business trip. The UK may just have defined the future of air travel in the near term. Tell us about Boris Johnson's rocky press conference, but more importantly, what it means for us all.
Okay, yeah, I mean, Boris Johnson has made actually a speech on Sunday evening talking about the way out of lockdown. Not very well received because it was pretty devoid of hard detail, and also because he's discovering one of the limitations of devolved government, which of course you have with your federal system anyway, which is that not everybody, not all, the leaders of Wales, Northern Ireland, Scotland don't necessarily agree with him. So, the politics is interesting, and there's no consensus there. But the most interesting thing from our point of view is that he was very clear that the UK will introduce quarantine on incoming passengers coming in by air of 14, 15 days when the whole lockdown process starts to be lifted. And this is, from the point of view of the airlines and therefore the airport groups and so forth, it's a little short of catastrophic. It is such a powerful deterrent to anybody flying, because if you've got to come into the UK and then go straight into quarantine, well, no point in business travel, and frankly, not a lot of point in taking a holiday, because you'd have to take the same amount of time off just as part of your quarantine. And I think there's going to be a lot of toing and froing about this. But this shows to our mind how unbelievably difficult it's going to be for the airline groups to recover, and hence for the aircraft makers to recover, because the presumption is going to be against air travel, not in favor of it. This is not going to be a snapback. It's not going to be a V-shaped recovery or anything like that. It's probably going to flatline if this sort of quarantine process is imposed. The one glimmer of sort of optimism actually comes from Austria. Austria has already got a 14-day quarantine requirement for all incoming passengers. But if you so want, at Vienna Airport, you can pay 190 euros and have on the spot a COVID-19 test that will tell them whether you are infected, in which case back to square one, or if you're clean, in which case you can go straight into the country. That would seem to me to be the best 190 euros you could spend if you're going to go traveling. But the UK is certainly not set up for that sort of testing at the moment, and I very much doubt a lot of other countries are either. So until then, air travel is going to remain, frankly, standing on the tarmac.
Ron, why don't you start us off on what you think the market impact of this is going to be? Richard, I want your take as well. As the market was absorbing, and we talked a little bit last week about Warren Buffett getting out of the airline business overall, and sort of the powerful message it sent.
Well, I think the reality is, at least for the remainder of the year into next year, until there's some sort of epidemiological solution, either a vaccine or otherwise, we're all going to have to learn how to live with this. And, learning how to live with it, one of the realities is learning how to fly with it. And like we've talked about before, commercial air travel, different than maybe other modes of private transportation, just, social distancing and air travel, it's just really hard to make it mix. So it's, as we go forward, that's one of the things we're going to have to learn. When you look at the outlook that many of the U.S. airlines have talked about, global airlines, Even Boeing themselves recently on their earnings call, they're looking for a recovery that's going to take. I think the consensus out there is you're getting back to 2019 levels of air traffic by 2023. It's a scenario. It may or may not play out that way, but it seems like, at least to me, that's probably an optimistic scenario, that it might even take longer than that. But that's the reality. And the market broadly has to adjust to that. And I'm certain we'll talk about this a little bit later, but when you look at the performance of commercial aerospace stocks or stocks that are very heavy in commercial aerospace compared to the rest of the market, they have definitely lagged. And that's one of the points that there's been debate about in the investor community. It's like, when can you get back into commercial aerospace? Where should it be? That kind of thing. It's raised investor flags, because investors, as they sift through the market to try to find opportunities, commercial aerospace kind of pops up on people's screens because it's lagged so much relative to other areas of the market.
Well, and we're just feeling that impact, right? Safran, I think, announced 3,000 job cuts just last week, right? So, I mean, the market is going to see this unspool, and we can have a broader conversation about why the market is behaving so positively given so much negative view. Let's go to Richard first, though, because I want to get your sense, Richard, because you've been tracking this and writing thoughtfully about it and commenting as well.
Yeah, it just seems that there's a much broader problem going on here. And, I think Sash is right. This might be, for the next few years, the future. As Ron says, it might be a 23 story. It might not. It's a scenario. Unfortunately, I think everybody has been configuring themselves for not anything like this. Basically, they've been, the old cliche, they're in it for a sprint, not a marathon. And this is going to be a marathon process. So whether that's in the form of production cuts at Airbus and Boeing, or whether it's in the form of government aid packages for businesses at risk, I think people are going to be surprised when we don't start feeling that sharp delta you associate with a V-shaped recovery. The last I checked ICAO's numbers, I hope they've changed, but when I checked them 2 weeks ago, they were still ridiculously optimistic about that V-shape. There are a lot of true believers in that V-shape. And I think, unfortunately, it drives what policymakers think and do. And we've really got to think, how do we survive as an industry, including the health of the second and third tier and whatever else, when we're going to have a heck of a drought in terms of production. We haven't dealt with anything like this in a very long time.
So is it too early to figure out what the production impact is going to be given this latest decision? I mean, because, early in this, we joked about whether or not we're going to go back to like sort of ship travel times, right? 14-day quarantine is, some people may like it, most people will not. There's going to be cost associated with it. It's a great way to bolster the treasury, right? 190 euros a pop, $200, $250, $230 a pop is pretty good way of doing it. But then again, it slows down. My question is, once people get used to not traveling, how much harder is it to start traveling again and getting back to normal again? Something that we've been talking about on this program for some time.
I think it's very easy for market forecasters and those of us who are trying to look into our crystal balls and pick out scenarios to anchor on scenarios from previous downturns and how it could be from what we know. And I think a point that you've brought up, and it's an important point, and it's I think a difficult point for a lot of forecasters to think about, is, and it's those dangerous words, what if it's different this time? That, are there lessons being learned about working from home, working remotely, working with things that I used to think were not substitutions for travel, but for, additions to things like, virtual meetings, that sort of stuff. What impact that could have going forward. I will say this from the work we do, we're assuming that, we get back to a world where people are going to travel for all the reasons they traveled before, because they kind of always have, right? I mean, it's an industry that has tracked, GDP regionally and globally since the beginning of the industry. Is there something secular going on that's going to change that? It's hard to say. I think it's important to be open-minded to it. However, I know our financial forecasts don't contemplate that. And I would argue, and maybe Sasha and Richard have a different point of view, that the industry is not arguing that either, that the industry is arguing that we get back to, if it's 3 years, 5 years, or there's some period where you get back to normal. But I think your point is well taken.
But if I can add to Ron's points, the issue is what is normal. We would argue that the industry can almost certainly get back to a similar level of growth to what we've seen before. And we all basically, the consensus is 4 to 5% passenger growth per annum. Yeah, I don't have a problem with the industry getting back to that level of growth, but it's going to get back to that level of growth, we would argue, from a massively lower base. We've seen so much value destroyed in this industry so far in 2020, and we're going to see a ton more in Q2 and in Q3 as well. So it's a step down in the graph, I think, and therefore we may get back to the passenger levels of 2019, let's say 4 to 5 years out, but we're not going to get back to the the numbers that we were looking for 2020, 21, 22 until much further beyond that. There's always going to be, in our view, this gap between our forecast before and our forecasts after. And it's that gap, the value that's been destroyed by this virus, that is the overcapacity in the airlines. And that overcapacity in the airlines is why they don't actually need any aircraft. They've got tons of aircraft. Most of them are very new. Most of them are very fuel efficient. And by the way, fuel efficient, who cares with the oil price at this level? Right. Just really not very important anymore. And that's the problem for the industry. And Boeing and Airbus are producing far too many aircraft still, after Airbus's and Boeing's production cuts. They're probably producing twice as many as they need. And Boeing is making it worse by trying to force the MAX back into the market at a ridiculous rate. Of you.
Yeah, complete agreement. I mean, the problem is that any traditional model, and everyone has some kind of model for aircraft production, right? It could be a simple one of anticipated fleet growth on the basis of traffic demand, minusing out retirements. And, it can be pretty straightforward. Any way you do it, no matter how elaborate, the end number for next year at the end of the day is a goose egg. So if you're building 600 each or 800 each or whatever, you're feeding into what you can term a synthetic market. What is a synthetic market? Well, it's one that's not based upon the organic demand of airlines purchasing jets. Rather, it's the willingness of financiers to extend themselves, to keep going, to get a really good deal on a jet and hope that, yes, 7-8 years from now, it'll all pay off. Or the willingness of governments to provide aid packages of the kind that have been contemplated for Airbus and Boeing to keep the supply chain going and keep people employed. Let's make no mistake. Next 2 years are a purely synthetic market, depending upon the wherewithal of the finance community and, well, the farsightedness and hopeful generosity of governments. There is no organic market for what we build in this industry next year.
Let's talk a little bit about airlines, because Sir Richard Branson is selling Virgin Galactic to prop up Virgin Atlantic and Virgin Australia. And it would seem, based on what you just said, Richard, that the bailout packages that the state-run airlines, and I think that we're all in agreement that the state-run airlines are the ones who are going to fare the best in this, that the bailout packages they're getting, whether it's Lufthansa or Air France KLM or anybody else, are not big enough to tide them over. So let's talk, and Sash, maybe start us off on Branson selling Virgin Galactic to support the rest of his aviation enterprise, but also whether or not the subsidies everybody will get are going to be sufficient to tide them over, given the depth of this downturn.
I'll do that the other way around, because the answer from our point of view to the second question is very easy, which is that the subsidies available from various governments are purely there to keep people in employment in the airline industry for a very short period of time, not even till the end of this year. There is nothing in those subsidies of the scale required to actually really keep the, to get the airlines back to their good old aircraft buying days. Richard Branson is a really interesting example. Virgin Atlantic is the UK's second international carrier, but a very distant second to British Airways. It is in as bad a state as everybody else's airline is in, but it's made more difficult by the fact that Richard Branson doesn't pay a huge amount of UK tax. So there isn't a huge amount, the political investment in him is not as big as it is for British Airways through IAG Group. And the UK government has said groups that need a government bailout have got to show that they have exhausted all of the other sources of finance first. And it's very, very difficult for Richard Branson to say that when he owned a couple of $1 billion worth of stock in Virgin Galactic. He clearly hadn't exhausted all the other forms of financing. And hence, having thought that he could go cap in hand to the UK government to get a subsidy, he's beginning to realise he's going to have to liquidate one of the most interesting assets that he's got in his group. I think, watching, certainly in the UK, how the politicians are dealing with this, they are being very careful about the deserving as opposed to the less deserving groups that receive bailouts. And, state-owned carrier, or flag carriers rather, because they're not all state-owned, but flag carriers clearly are in a league of their own compared to secondary and tertiary carriers.
By the way, I would second that, because Virgin Galactic certainly, along with Virgin Orbital, which has been spun off, are both among the more interesting companies that are out there. So you're absolutely right. What's being lost by way of future revenue in order to shore up something which is certainly right now a much more core and profitable enterprise. Richard, your take?
Yeah, what happened the last time we had a serious disruption in the airline industry, back, I guess, a few years after 9/11, you had a spate of bankruptcies, basically restructuring in the industry. And you had basically Chapter 11 airlines, stalking the landscape like zombie turkeys with zombie pricing. It's just absolutely terrible for people who tried to compete without going bankrupt. Southwest pulled it off, because Southwest always pulls it off. But, it's not easy. And I'm wondering if that's what's going to happen this time. Basically, the big legacy, state carriers, or de facto flag carriers, your Lufthansas and Qantas, in the case of Virgin Australia against Qantas, are going to have a lot more latitude to price. And that's going to be to the detriment of the folks who aren't getting aid. I don't know how they're going to pull it off, the smaller carriers, especially if they have a business model that relies upon high density seating with an ultra low cost carrier configuration. That's going to be really tricky, and the landscape is probably going to get quite distorted. And then of course there are still more extreme examples. I guess Italy just sort of gave up. We're not even going to subsidize Alitalia. They just said, we'll simply make it a nationalized carrier. All of this means the market's going to get a bit crazy, and I wouldn't want to be in running a second tier airline right now.
Ron? By the way, the zombie turkey has got to win some award. Just trying to imagine zombie turkeys, airlines, and all of that. Or maybe that's how we will be traveling, as zombie turkeys.
If we could mash up Halloween and Thanksgiving, I think it would actually be perfect.
Do you have to cook a zombie turkey? Can you actually stuff a zombie turkey? Anyway,
zombie turducken.
There you go. Does the duck have to be a zombie too? Anyway, so when I think about it, this is kind of the crux of the issue. I think maybe changing the focus a tad. The problem with airlines, right, is it's a business model that barely works at 80% capacity utilization, right? I mean, it works, ideally at like 85% or higher, and right now we're at like 5% capacity utilization. So even if things get dramatically better and we're at 50% capacity utilization, the business model still doesn't work. So it's a business model that won't work for a while, right? That's the thing that when you think about, well, we're going to give the airlines 3 months support. So what? Who cares? in 3 months, we're not going to be back to this 85% capacity utilization or whatever, pick your target, but you're going to be nowhere close to it. So the level of support that the global airline industry needs, generally speaking, across the board, writ large, is got to last for a long time, or the industry dramatically has to resize itself so it can operate at these what we know today are much lower capacity utilization levels, meaning they have to reduce size so capacity utilization goes up. And that's the core issue, right? And it for sure the airlines, like the government support, can hang on longer. But if you don't have that, you're not a flag carrier, whatever, it's going to be tremendously difficult.
McKay Coppins wrote an interesting story about how tense his brief 2-stage trip from National through Chicago, I think, and I don't remember where he was going, and how tense and uncomfortable it was, and the fact that there were too many passengers on the plane. Right? I mean, everybody expected the plane to be empty, and this trip was in April, right? What does that article tell us? And when you think about 14-day delays and all of that, what is the travel experience like? Because he didn't get beverage service. Apparently, the guys in the front of the plane in first class, got ginger ale, but not all that much more than that. What is the experience itself like for people in this interim period? Because that itself, I mean, I'm somebody who's always enjoyed traveling. There are some people who really don't like traveling. They get very, very tense traveling. They're not good travelers, meaning pleasant travelers. And they make sort of a wondrous experience somewhat more unpleasant for everybody at the end of the day. Does the experience then play into the negativity of wanting to travel in this period?
Yeah, of course it does. And just as a out of my own personal life, I love going to the grocery store. It's an oddity. My wife loves that about me. I just love going in there and looking at all the stuff. But nowadays, putting on a mask, putting on gloves, waiting in a line, being 6 feet apart, coming out of the grocery store, taking off my mask, taking off my gloves, using the what do you call it? The cleaner on the hands,
the hand
wipes,
gel,
and the cleaner and the hand gel. It just kind of sucks, right? So, and like you, I like to travel too, and we all have a bias towards that. But I can't imagine that having the experience be, even more tense for a lot of people. Being, you just can add on the list, won't negatively impact the industry, at least for a while, right? The thought of getting the family together, putting the masks on everybody, doing all that stuff, it is going to be a headwind for sure. I don't see how it can't be, right? And then the false expectation that you're going to get on an airplane and it's going to be empty. Well, that's the whole problem, right? It gets back to capacity utilization. I mean, for the industry, they don't want the airplanes to be empty, right? If you're going to cut back your schedules and reduce your fleet, you want the airplanes that are flying to have load factors that make sense, which, for better or for worse, I guess, at least perceptionally for worse in this environment, that's not what people are going to want, but that's the way it's going to be, right? And then the last factor, we all know about the headlines of fights on airplanes, people getting dragged off airplanes, and that was during normal times, right? So now, imagine that little tube filled with a lot of tense people. The flying experience, I can't imagine is going to be anything other than just not very good.
Richard and Sash?
Yeah, in the before times, I flew every week.
Before times.
In the when times were good, I traveled every week, and I never saw anything bad. I'm sure these stories happen, and I read the same story in the Atlantic. I thought it was, I have no doubt that it happened exactly as it was described, but it left me thinking that maybe the problem here is not that people are flawed. There's always going to be 1% of the population that's kind of sociopathic, or whatever the statistic is. What's needed are rules, right? And we don't have that. We're living the stage of something bad has happened. You should probably feel uneasy about flying. You should probably mistrust your neighbor because 10% or 20% of people have it or have had it or something, or whatever the number is. This isn't conducive at all to travel when there are no rules. And there need to be a uniform set of rules promulgated by all of the adults in the room, whether it's, whether it's industry groups working together, whether it's regulatory bodies, FAA, EASA. Everyone needs to get together now and say, here's what we need to do. Is everything's on the table. Thermal imaging, no middle seats, everything needs to be on the rule. Spacing between people when they get on the plane. I think if there were clear rules and expectations, and therefore the implicit promise that if you behave, if you follow the rules, you'll be fine. You won't get this kind of horror story. That's my fervent hope.
Sash?
Travel BC, isn't it? Travel before coronavirus. We'd all love to go back there. It feels a desperately long way away. I think the problem with rules is going to be just getting all of the international. I mean, there's been so little international coordination during the crisis. Getting international governments to coordinate on a minimum standards, whether it is quarantine or whether it is when and where you wear gloves and masks and so forth, it's going to take a terribly long time. That means probably sometime next year, if not before then. Come back to what I said earlier on. This is going to be a really slow recovery.
And now a word from our sponsor. The Defense and Aerospace Report is brought to you by the Bell V-280 Valor, bringing the mission technology of the future to the battlefield of today. Visit bellflight.com for more. We've got a little bit of time left, and we've got a lot of topics. Let me go to the market and how the market is behaving, Ron, as if this is not as bad as it is. Another stunning unemployment figures coming out. Layoffs are continuing, and yet the market is behaving as if, right? I mean, it's up 30% from where it was in March, and it's like, oh, well, the tech sector had a good week and good returns. I mean, that's sort of like saying, like, oh, look, these deck chairs are beautiful. Okay, but they're on the Titanic, right? I mean, at the end of the day, it may be a lovely deck chair, and the band might be magnificent, and the engine room really good, but the whole thing is sort of sinking. Is it because of algorithmic trading? Is it because there aren't as many humans involved? I mean, what's driving this?
Well, there's a couple factors. So if you look at the market, it depends on how you measure it. So the S&P is up almost 31% off of its March 23 lows. But bear in mind, a lot of that's being carried by a small group of companies. The NASDAQ is actually up for the year. If you were to take out from the S&P the stocks that are, you call it, the big tech leaders, you take them out, the broader market isn't up as much, right? So there's a handful of stocks that are very influential in the market that are driving how these indices look, right? So it's you got to bear that in mind, right? So it's a little bit skewed. So if you were to look at I think an even weighted S&P 500 index that's not market weighted, just sort of you just weight everything the same amount, the S&P would actually be down 10%, almost flat. So bear that in mind. That's one thing so it's the subtlety of kind of what are you looking at. Two, the market is also betting on a V-shaped recovery. That's clear. And when you talk to folks, that's what the market is expecting to see. Other factors, it's when you want to call it, it's there's no alternative.
The old expression, you have to do the laundry, right? At some point, you've got to take a bet. You got to do something.
But I mean, it's even more fundamental than that. It's if you're going to own U.S. Treasuries, you're going to get paid 67 basis points, right? So it's all right. I can do that, or own the market, and the market has a better yield than that. The market yields almost 2%. So there's nothing else to do. So that's part of it. And then if you think about all the levels of support that have been thrown in the market by the U.S. Treasury and the government, that's another factor. The things I like to look at broadly on how's the economy doing, how are things going, it's energy prices, and WTI is $24, Brent is $31. A year ago, Brent was $70. So that's a pretty broad indicator of how things are going. But the market is looking through this, saying, hey, 2020 is going to be a disaster. let's look at 2021 and trying to anchor off of 2021. The one point of caution is, however, I would say the headlines are now starting to percolate up, and you're seeing the investor community start to worry, have we gone too far, right? So that's kind of where the psyche is now. So we'll see what happens from here, but I think that's what's been driving it.
Sash, you see it from a European perspective.
Europe has nothing like the strength of tech sector that the US has, and so European markets have not had those enormous stocks anchoring overall stock market performance. Yeah, still, I mean, even in some countries in Europe, you have to pay to put your money in the bank, and on that basis, that there's a very powerful incentive there for you to go and invest your money almost anywhere else. But that doesn't mean to say that it's intrinsically an attractive option at a time when it does look as if we're going to, the recession is just going to get worse for quarters and quarters to come. And companies, the companies that have reported this past week, which have included Leonardo and Rheinmetall, which are, broad spectrum examples of European defense aerospace conglomerates, they're all coming up with the same thing, which is they're saying, look, we have a tiny amount of idea of what might happen to some of our businesses in Q2. We have no idea what the the full year outcome is going to be. It's just way too early at the moment. So, European markets are as volatile as the US. 3% is just noise. 5% is pretty much a daily move in either direction. No need to break sweat about that. But it doesn't seem to me at the moment that there's a lot of enthusiasm for investment in equities on a 3-6 months view.
Richard, anything you want to add to this before we go to the first quarter earnings?
Well, I think it's important to remember that cash generally needs a home. You can't just put it all in treasuries, as Ron points out. You're just not going to get very much. And I'm kind of hoping, maybe it's a bit misplaced, but I'm sort of hoping that the same dynamic applies to jetliner financing. That people just say, "All right, my money needs a home. I may as well stick it in jets. It's a pretty good hedge against inflation, and one day it'll be a durable asset that can go anywhere in the world and earn revenue." So I'm kind of hoping that protects us from the worst case scenarios of jetliner production, the same exact thinking that's driving the market to where it logically perhaps shouldn't be.
Very good point, Richard. Ron, walk us through the U.S. earnings, because Sash sort of gave us a snapshot as to some of the big companies that reported. Sash, I want to get your take, a little greater detail on some of those figures as well, as opposed to the top line. But Ron, walk us through, because we had a number of major U.S. companies that reported last week as well.
Yeah, so in our world, there was a broad cross-section that reported. Probably most notably was Raytheon Technologies, because it was their first quarter reporting as Raytheon Technologies. But just to kind of round out the group, you had Leidos, L3Harris, AerCap, Air Lease, BWX Technologies, TransDigm, Bombardier, Huntington Ingalls, Curtiss-Wright. So there's a whole slew of them and more. There's some I'm missing off that list, and I apologize for that. Probably the broad takeaways, I would say this. One, it was nice to see Raytheon Technologies report as Raytheon Technologies. However, it was sort of a weird earnings report because the deal actually closed after the quarter had started. So they actually reported two separate companies in one earnings report, which was a little confusing. But to a lot of investors, big takeaways were they're looking for their commercial aftermarket businesses to be down something like 50% this year, which is not all that different than what we've heard from different companies. TransDigm probably had the most sober view of the companies that reported this past week. They pulled back their guide like most companies did on their commercial businesses, but they said one of the scenarios they're looking at for planning purposes is the commercial aftermarket business being down 70-80%, something like that this year. So, and I think a lot of people said, wow, but honestly, that could be realistic, right? So, kudos for them for just kind of saying, hey, this is what we're seeing, instead of trying to throw something out there that is maybe unrealistic. Two other interesting points. One of the things we've seen across the earnings period is there's a lot of in the business jet market. It's really a world of have and have-nots. Bombardier was hit pretty hard by the COVID-19 situation, where Gulfstream really really wasn't. Textron was hit pretty hard, and so far Embraer doesn't seem to have been. So the impact of the pandemic on the business jet suppliers seems to be not even-handed. It's different for the different companies, which I think is interesting. And then finally, both AerCap and Air Lease reported last week, and I think some of the more interesting commentary that came out of those calls was they are expecting the structure of the leasing industry to change. If we get into this, after Corona, whatever you want to call it, the AC environment, where there were many leasing companies that started in, say, the last, call it 5 to 8 years, that were chasing yield, that didn't really understand what they were getting themselves into. A lot of those folks are going to get shaken out of the industry, and that the structure of the industry could look very different when we get to the end. Probably some of the most interesting commentary came out of the Air Lease call, where they had both their founder, Steve Hazy, and John Pluger, their current CEO, on the call, talking about what's going on the industry. And I think one of the more interesting statistics that they mentioned was all of their customers have come back to them asking for some sort of adjustment, that they've dealt with about half of them so far. But everybody they work with has come back. They were reasonably optimistic that they could sort things out. And then again, it looks like it's just how long does this last, and that sort of thing. So Richard's observation that that you might have, factions of the financial industry helping out that could make it maybe not quite as bad for Boeing and Airbus, might play out that way. We'll see. But we had some interesting assessments out of those guys. So let me leave it there just to be brief.
Let me ask you quickly about L3 and Huntington Ingalls Industries. How did they do? Because HII is pretty much pure play defense with a strongly growing technical business, and L3 has got a lot of defense work, and this sort of sense that the defense contractors are somewhat inoculated by this if they don't have too much of a massive commercial overhang.
Yeah, it was broadly not different for them. Huntington's results were consistent with what we've seen from other defense contractors. However, they did have a little fumble in their technical solutions business, but that largely has to do with a shipyard that they're divesting later this year. So that should go away. There's a San Diego ship maintenance business that they have already announced that they've in the process of selling, and that should close. But broadly, and what they mentioned, that this is interesting. This is stuff we've heard come out of the DoD, more specifically the Navy, that the Navy has really increased their contract writing velocity, if you will. Secretary Gertz has, or Undersecretary Gertz has said publicly that the Navy is about 33% ahead of where they were last year, about 2 weeks ago, in terms of contracts that they put in place, and they're seeing that. L3 Harris results were very similar. They had some little ups and downs in different aspects of the business. They have a little bit of exposure to commercial aviation, and that was no big surprise. One of the not so bright spots, but it's a little piece of the company. But broadly across the rest of the portfolio, it was generally in line with what people were saying. And I would say this: if you look at how defense has done relative to commercial, pretty much in general across the defense industry, you've seen modest changes to outlooks. Outlooks kept in place, first of all, that they have guidance for the year. Modest changes to it, largely to do with work disruptions, that kind of thing. Good backlog positions. Where on the commercial side of the house, across the board backlog, outlooks are gone, and it's really like a tale of two cities when you look at defense versus commercial.
Sash, you want to fill in some of those earnings as well as talk a little bit in greater detail about all of them, as well as Rheinmetall?
Yeah, well, look, I think Ron absolutely got that right there. I think the interesting thing, and we had two of the larger European defense companies, or defense, they're very much mixed companies here, but Leonardo and Rheinmetall reporting this week, and the defense businesses are absolutely fine. I think in the case of Rheinmetall, actually very, very healthy indeed. Their armored vehicle business really was the sort of standout performer for the company. What was interesting for Leonardo, Italy went into the whole crisis a lot earlier than any other country in Europe, and boy, that showed. Their problem specifically has been that they have a couple of businesses where they haven't been able to deliver product to the customers. Helicopters, you just can't get customers to come in and take delivery of the helicopter you've produced, whether it's civil or military. And similarly, the ATR regional turboprop business. So those two businesses, and certainly the helicopters business should otherwise be a perfectly healthy business, just had these glitches in the first quarter, which will almost certainly persist through Q2. And those have built up working capital as a consequence of that. Rheinmetall, the thing that's holding them back is their automotive components business, which historically was about 50% of the business. At the moment, it's probably about 40% of the business, but it's going to be in loss this year. And so the defense company side of the business company is just having to, work 3-4 times as hard to keep the whole group on an even keel. It's not going to stop Rheinmetall's profits from falling this year, but the defense business, which is really supported by Western and Central European rearmament, is a very, very strong story. They are delivering stuff for Germany. Germany is going to command the NATO Very High Readiness Joint Task Force next year, which is the big land task force division plus size. And because Germany has got that responsibility next year, they are spending hundreds and hundreds of millions of euros on communications equipment, on logistics equipment, on spares, to make sure that the German component for the VJTF is going to perform perfectly, but also to integrate the other countries that take part in the VJTF into it. It's a very, very good example of Europeans finally actually taking responsibility for their own defense. And Germany takes it very, very seriously indeed, and that comes down to Rheinmetall. So, for Rheinmetall, the problem is their automotive business, which, as Ron said about commercial aerospace, just doesn't, you can't forecast it at the moment. No point in them providing guidance for it. And that, of course, makes making a judgment on the stock harder than usual.
Richard, any thoughts on earnings? Before we go, what did you guys make of John Ostrower's story? John, of course, the founder and the editor of the Air Current, tremendous online publication, and his story that Boeing may not be interested in Embraer, but may have taken a shine to Mitsubishi. Very quickly, want to get whoever wants to grab that, and then get your guys' take on what you're keeping your eyes open for over the coming week. Who wants to grab the Mitsubishi Boeing story?
Yeah, sure. I mean, I found it intriguing, of course, as I find everything that Ostrower does excellent work. That was originally the default position, right? Mitsubishi, I think, embarked upon the MRJ a decade or whatever it's been ago with the full expectation that the Boeing alliance would continue. When the Embraer deal was disrupted, to put it mildly, a week or so ago, I thought this might get in the way, in fact, of Mitsubishi concluding its agreement with Bombardier to buy the CRJ service business, which solved their problems about not having any kind of, MRO activities to support the MRJ. But a couple of days ago, the Mitsubishi folks and the Bombardier folks basically said, nope, June 1st, it's going ahead. The deal will be done. So while I like the idea, I'm intrigued by the idea of a Mitsubishi-Boeing MRJ alliance, surely one of the rationales would be to save the Mitsubishi the trouble of having to invest in those service centers. So I'm kind of wondering whether those two futures can coexist or need to. Any
other thoughts on that, Sash or Ron?
Yeah, I mean, if you had the choice of buying an MRJ, which is it's a very immature design, but boy, it's a great aircraft, or the E2 jets, which are, have been stretched, and you can sort of see some of the flaws in the E2s, and the things aren't selling, which tells us something as well. I think, a deal where you bought the MRJ would be a massively better one in terms of future-proofing your strategy at the bottom end of the regional jet market.
Ron?
Yeah, I guess I'm more skeptical of the whole thing. Ultimately, we'll see where it goes. Boeing and Mitsubishi getting closer together, like what do they get out of it ultimately on the Boeing side, right? I mean, inexpensive engineering, folks that are really good at designing airplanes. Not to put the Mitsubishi guys down, but it's taken them a while to certify the aircraft that they have. From the Boeing side, I struggle to see exactly what they get out of it, other than keeping a potential competitor with deep pockets at bay. So I don't know. Call me the skeptic. I'll say this, however, the way the Boeing and Embraer deal ended on terms that were, you could see from the reaction from Embraer, kind of insulting to them. Boeing might have inadvertently planted the seed of a third competitor. We'll see how that seed grows and what happens. But I would be very hesitant at this point to count out Embraer. As Richard's pointed out in presentations in the past, Embraer is probably the only startup airplane company to have survived and made it in the last 50 or 60 years. Those guys are fighters, and it goes back to Santos Dumont. Aviation's in their blood, so I would be hesitant to count them out so fast. I mean, we'll see where it goes. It's a difficult environment, but those guys have been through some really hard times, and this is just another hard time. They'll get through it, and we'll see where they end up.
It certainly is a passion, and right, why wouldn't you want to buy an organization that's up, running, and a first-tier competitor, right? I mean, as good as the Mitsubishi guys are, they're not in a market position that Embraer is right now. And back to that original point, and I think, Ron, you were the guy who made the observation, right? Look at the fuselage diameter of the KC-390. It's the same fuselage diameter as a 767. So there's a message there. We can build a wide-body fuselage if we want to keep moving up the food chain.
Just one point I would add, to be crystal clear about it. If they had the capital, Embraer could do a competitor to the 737 or A320 tomorrow. If they had the capital, they could do a wide-body airplane. It's just a matter of, it's a capital question, an investment question, and broader market questions. It's not a question of having the technical prowess to do so and not having the technical prowess to support it. So there's a lot of capability in that organization, and ultimately, and a lot of spirit. And I think ultimately you mix the two together, I wouldn't count them out just yet.
All right, very quickly, let's go Richard, Ron, and Sash. Very quickly, what are you guys keeping your eyes peeled for over the coming week? What are you looking for? What are you looking at?
Oh, the usual Fast Five, right? What am I looking at? What's coming up this week? What's exciting? What's happening this week? I mean,
who am I? Why am I here?
Who am I?
Why are there zombie turkeys on my front lawn? God.
Right. Is there anything interesting happening this week? To me, it's all about the epidemiology of COVID-19, and are we seeing any progress there? I mean, we succeeded in arresting the curve, but it doesn't seem to be coming down, and that ultimately is going to determine when traffic starts to recover, and all those factors. So I'm not looking for any other industry-specific developments in the coming week or so. It's all about what's happening in broader society.
As everybody starts opening up, whether or not we're going to, at the end of the day, have new flare-ups. Sash?
Just frankly, the daily toll of COVID-19, but I think probably more broadly, how the airlines are responding. I thought it was very interesting comments that Ron made from AerCap and Air Lease about what they are being told by their customers, but we're also getting this coming out in public now. Sometimes in the quarterly results, International Airlines Group said they've deferred deliveries of 68 aircraft over the next couple of years. Well, that's a big chunk of Boeing and Airbus's deliveries, but we're going to get more airlines just drip feeding out these details, and I think this is going to be what pushes Airbus to another production cut, possibly as early as June, and is going to have to push Boeing that way as well. I think in defence terms, most European governments don't have the ability to walk and chew gum at the same time, and defence has very much played second fiddle in terms of policy at the moment. But I think that we're starting to see in Eastern Europe a bit of a focus again on some of the big equipment programs, Czech Republic, Hungary in particular. I don't think we're going to get announcements, but we may at least get some sort of indication from the governments that they're going to start looking at those again sometime for the second half.
Ron?
Yeah, so a couple things, right? I mean, we're in this crazy dynamic environment. I think quite literally while we were speaking, Avianca Holdings filed for Chapter 11. So it's never a dull moment in commercial aerospace at the moment. So all of that, but more focused. This week we're hosting the Bank of America Transportation and Industrial Conference. Was supposed to be in Boston, now is being held virtually. It'll be one of the first major virtual conferences we'll be doing. Over 50 companies from across the transportation space, so airlines, road transportation companies, you name it, plus some of my coverage. Raytheon Technologies will be speaking, General Dynamics will be speaking. So that is one focus. And the other focus is the Green Book, as you know, was released this week. So when we have some time now that earnings is passed, peeling back the onion on the Green Book that it is and digging in and seeing what we find in there, what little jewels we find in there relative to what we were expecting and our own forecasts.
Guys, thanks very much as always for joining us. Really, really appreciate you taking as much time with us. Hope you have a great what's left of Mother's Day and look forward to talking again next week. Thanks again.
Great to be here, Vago. Thank you.
Yeah, thanks, Vago.
Always good to be on, Vago. Thank you.
Thanks for joining us this week. Please follow our daily interviews with top government, military, industry, and thought leaders at Defense and Aerospace Report, and subscribe to our weekly newsletter. Follow us on Twitter at DefAero Report. That's at DEFAERO Report. Like us on Facebook at Defense and Aerospace Report, and check us out on LinkedIn. Check out our weekly cyber report sponsored by Northrop Grumman, and check out our virtual coverage of VSOFIC, the National Defense Industrial Association's annual Special Operations Conference and Trade Show that would have been in Tampa. Our coverage starts tomorrow with the Special Operation Command's Acquisition Executive Jim Smith and culminates at the end of the week with our interview with General Richard Clark, the United States Army 4-star general who is the 12th commander of the United States Special Operations Command. For more than 80 years, Bell has pushed past the boundaries of what's possible to drive aviation forward, going above and beyond flight, bellflight.com. Thanks again to Bell for their generous sponsorship. Hope everybody has a great Mother's Day and look forward to talking to you again tomorrow.